Dear students, in this video, you are going to learn the treatment of adjustments in the final accounts. What are adjustments? See, at the end of the accounting period, there might be certain expenses which are incurred but not paid. Similarly, there might be some expenses paid but not accrued. In other words, you have paid in advance. Similarly, there might be some incomes which are earned but you are not received. Similarly, you have received some income but you have not earned. Similarly, there are many other items which are not adjusted in the preparation of final accounts. So such items together called adjustments. These are taken into account by passing certain adjusting entries. Now let us take some of the adjustments and what adjusting entries you are going to make while preparing the final accounts. For example, closing stock. Closing stock is not included in trial balance normally because at the end of the year you have to go for stock taking. You have to physically count the number of items in the closing stock and value that, and then you have to incorporate that in the final accounts. Okay, how it is being adjusted? So for that, the entry is closing stock account debtor to trading account. So first it is entered on the credit side of trading account, and then secondly the closing stock is entered on the asset side of the balance sheet. So in a problem in the adjustment there might be given closing stock, so let's say 50,000. Then it should be credited to trading account. Then again it should be shown on the asset side of the balance sheet. For your information, any adjustment that should be traded twice, once in the trading and profit and loss account and the other earnings on the balance sheet. If the closing stock is given in the trial balance, then it is entered only on the asset side of the balance sheet. Okay, outstanding expenses. So expenses which have been incurred but not yet paid. For example, salary for 11 months might have been paid. So still 1 month salary is payable. So that's nothing but an example for outstanding expense. How it is to be adjusted? So expense account data, for example, salary account data to outstanding liabilities for expense account. In other words, to outstanding salary account in our example. Salary account data to outstanding salary. How it is to be adjusted in final accounts? If outstanding expenses are given in the adjustment, it should be treated twice. First, it should be added to the concerned expenditure either in the trading account or in the profit and loss account, and then on the liability side of the balance sheet. For example, wages outstanding. Item wages will come to the trading account, so it should be adjusted in the trading account. It should be added to wages account in the trading account. If it is salary, it should be added to salary account in profit and loss account. So first it should be added to the concerned expenditure account either in trading account or in the profit and loss account. Then it should be entered on the liability side of the balance sheet. If it is given in the trial balance, then it is entered only on the liability side of the balance sheet. Then prepaid expenses. For example, insurance prepaid. So actually it is not incurred but you have paid in advance. So in that case, prepaid, for example, insurance account debtor to insurance account. So prepaid insurance account debtor to insurance account, that should be the adjusting entry. How it should be adjusted? So first, if the expenses are given in the adjustment, it should be treated twice. First, it should be deducted from concerned expenditure on the debit side of profit and loss account. For example, If it is insurance prepaid, in the profit and loss account debit side, from insurance you have to deduct the prepaid portion of the insurance. Then it should be entered on the asset side of the balance sheet. It is as good as amount given in advance, as good as given in in the form of loan. So it is an asset. So it will come to the asset side of the balance sheet. If it is given in the trial balance, then it is entered only on the asset side of the balance sheet, because prepaid rent account or prepaid insurance account, these are all representative personal accounts, and the personal accounts and real accounts will come only in the balance sheet, and the nominal accounts will come to the trading and profit and loss account. Therefore, if it is given in the trial balance, then it is entered only on the asset side of the balance sheet, because it is personal account. Come to the accrued income or outstanding income. The income you have earned, income you have earned, yes, and it has accrued, but you have not received that. So outstanding income account, debtor to various incomes account. For example, rent receivable, rent outstanding. Rent is an income here. It is yet to be received. In that case, outstanding rent account debtor to rent account. Okay, so outstanding rent account debtor to rent account. If it is interest receivable, then outstanding interest account debtor to interest account. So if it is given in the adjustment, it should be treated twice. Once it should be added on the credit side of profit and loss account. For example, rent receivable means it is added to rent account on the credit side. And if it is interest receivable, it should be added to interest account on the credit side of profit and loss account. Then it is shown on the asset side of the balance sheet. It's an asset because the income is receivable, it's income. If it is given in the trial balance, then it is entered on the asset side of the balance sheet, because it is a personal account. Personal account will come to the balance sheet. Income received in advance. So here, though you have not earned the income, you have already received that. It is as good as a liability. And the adjusting entry for that is various incomes account debtor. For example, rent received in advance or pre-received rent. In that case, rent account debtor to rent received in advance account or pre-received rent account. So, how it should be adjusted? If income received in advance is given the adjustment, it must be treated twice. First, it is deducted from concerned income on the credit side of profit and loss account, and then entered on the liability side of the balance sheet. But if it is given in the trial balance, it is to be entered only on the liability side of the balance sheet, because you have not earned it. It is as good as you have taken a loan. Therefore, it is on the liability side of the balance sheet. Moreover, it is a personal account, and balance sheet is prepared with the help of real account and personal accounts. So bad debts. What is meant by bad debts? Bad debt means debt which is irrecoverable, not recoverable at all, and therefore it is certain that it is not likely to be recovered. Therefore, it is a loss. So it should be taken care of while preparing the final accounts. So bad debts account debtor to sundry debtors. So bad debt is a loss, so it should be debited to profit and loss account. And then to that extent you are not going to receive from the debtors, and therefore sundry debtors account should be credited. Normally sundry debtors account is debit. Since you are not going to receive so much of amount, therefore it should be credited. Yes, treatment in the final accounts. First, it should be shown on the debit side of profit and loss account. That is, bad debts account to sundry debtors, and then bad debts are transferred to profit and loss account. Then from sundry debtors you are deducting so much of bad debts. But if bad debts are given in the adjustment, must be deducted from sundry debtors on the asset side of the balance sheet. Sorry, if bad debts are given as an adjustment, first it should be added to, it should be taken to profit and loss account. If bad debt is already there in the trial balance, to that you have to add. Otherwise, profit and loss account debtor to bad debts account. First, bad debts account into sundry debtors, and then it should be transferred to profit and loss account debit side. If already bad debt is there, to that you have to add. Then it should be deducted from sundry debtors on the liability side of the balance sheet. If bad debts appear in the trial balance, then it should be treated only once, that is in the profit and loss account. It's a nominal account, and nominal account will be recorded in the trading and profit and loss account. The next, provision for bad and doubtful debts. See, on the date of balance sheet or preparing final accounts, there might be some debtors. Of that, some debts are not very sure to be recovered, and therefore such debts are considered doubtful. After the preparation of trial balance, trader may find that there are some debts, recovery of which is doubtful. You are not very sure that they are going to be received or recovered. Such debts are called doubtful debts. Doubtful debts are not known losses. You do not know how much of the debtors is irrecoverable. Their recovery is uncertain. They are called doubtful debts. They are only anticipated or expected losses. The provision made out of current year profits for meeting the losses arising out of doubtful debts is called provision for doubtful debts. So, on the date of balance sheet, there might be part of debtors, the recovery of which is not certain in future. You cannot simply ignore that. It's relating to current year debtors, though it may not be recovered in future. Therefore, in the current year only, you have to make a provision for that, and that is called provision for doubtful debts. Sometimes it is also called reserve for doubtful debts. Actually, more appropriate terminology is provision rather than reserve, because it is not an appropriation, rather it's a charge. So provision for doubtful debt is created at a certain percentage on the debtors after deducting bad debts given in the adjustments. That means from the sundry debtors, deduct bad debts given in the adjustment, not given in the trial balance. Bad debts given in the trial balance is already adjusted against sundry debtors, therefore not to deduct it again. So only bad debts given in the adjustment should be deducted from sundry debtors. On the balance, to create provision for doubtful debt at a certain percentage. And the adjusting entry for that is profit and loss account debtor to provision for doubtful debts. Okay, how it should be treated in the profit and loss account and the balance sheet? If the total bad debts for the year, that is bad debts given in the trial balance plus bad debts given in the adjustment, together called total bad debts, and the provision for doubtful debts required at the end of the year, that is new provision to be created, is greater than the provision for doubtful debts already existing in the books, then the difference will appear on the debit side of the profit and loss account. To put it in a different way, it is shown like this: bad debts for the year, which is given in the trial balance. Okay, then bad debts given in the adjustment. So we call this together total bad debts. Add new provision for doubtful debts, which is created at a certain percentage on the debtors after deducting bad debts given in the adjustment. So from the total, you have to deduct old provision for doubtful debts. For example, bad debts is 3,000 and bad debts given in the adjustment is 2,000, together 5,000, and new provision is for example 3,000, 5 plus 3, 8,000. Old provision for doubtful debt is, let us say, 6,000. So 8,000 minus 6,000, so 2,000 is required to be taken from profit and loss account. Therefore, profit and loss account debtor to reserve for bad and doubtful debts. So bad debts, add bad debts given in the adjustment, add new provision for doubtful debts. From the total, deduct provision for bad and doubtful debts. Supposing the provision bad debts, total bad debts plus new reserve is 8,000, but old reserve is 10,000, then you have more reserve than what is required. So 8,000 you require altogether, but you have 10,000. In that case, it cannot be shown on the debit side, rather it will be credited to profit and loss account. Okay, right, that is the treatment. It's given here. If the existing provision for doubtful debts, in our example 10 lakh, 10,000, is more than the total bad debts given in the trial balance, 5,000 plus additional, trial balance, additional bad debts together 5,000 plus new reserve 3,000, 8,000. Then the total of bad debts and the new reserve for doubtful debts should be deducted from existing provision, and the balance is taken on the credit side of the profit and loss account. For example, bad debts plus new reserve together it is say 8,000, whereas existing reserve is 10,000. So you have got more than your requirement, therefore it must be credited once again to the profit and loss account. Normally reserve is created from profit and loss account by debiting. Now what you have created is more than your requirement, therefore it is put back to the profit and loss account. So profit and loss account is credited, provision for doubtful debt is debited. Okay, the formula is given here. Provision for doubtful debts is equal to bad debts, total bad debts plus new reserve minus old reserve. But if old reserve is more than the total of bad debts and new reserve, then it is O, that is old reserve minus total of bad debts plus new reserve to be credited to profit and loss account. Alright, now we'll move on to the provision of reserve for doubtful debts. So normally on the debtors, when they make the payment in future, there is a practice of allowing a certain percentage of debtors as discount. So normally it is a practice in certain type of business. So if they make prompt payment in future on the debts which are outstanding today on the date of balance sheet, discount will be allowed. And discount being a loss, and it is relating to current year Sunday debtors, it cannot be ignored. Therefore, it should be taken care of. Therefore, what amount will be given as discount subsequently, you are not very sure. What part of debtors will make prompt payment and discount will be allowed to them, you are not very sure. Therefore, you have to make a provision against that based on your previous experience. Certain percentage of good debtors is created as provision for discount on debtors. So let me go through. The provision or reserve made out of current year profit for meeting the loss arising on account of discount that will have to be allowed to the debtors in the subsequent period is known as provision for discount on debtors or reserve for discount on debtors. Provision for debtors is created at a certain percentage of debtors. What is meant by good debtors? Debtors minus bad debts given in the adjustment and new reserve for doubtful debts. The journal entry or adjusting entry for that is profit and loss account is provision for discount on debtors account. How it is shown? See here, cash discount allowed during the year. Add new provision for discount on debtors. Okay. And then therefrom you have to deduct old provision for discount on debtors. So on the remaining amount you are debiting into the profit and loss account. Cash discount allowed during the year, add new provision for discount on debtors minus old provision for discount on debtors. But how you create new provision for discount on debtors? That's on good debtors. What are good debtors? Debtors given in the trial balance minus bad debts given in the adjustment minus new reserve for doubtful debts. That's good debtors. Of that, certain percentage is created as new provision for discount on debtors. If the total of discount allowed plus provision for discount on debtors is more than the existing reserve for discount on debtors, then the remaining amount should be debited to profit and loss account. The entry is profit and loss account debited to provision for discount on debtors account. On the other hand, if the existing provision for discount on debtors is more than the total of discount allowed and new provision for discount on debtors, then the difference will be entered on the credit side of the profit and loss account. For example, in this case, cash discount allowed during the year is, let us say, 4,000, and new reserve for discount on debtors is 3,000. 4 plus 3 is 7,000, and existing reserve for discount on debtors is, let us say, 5,000. So here 4 plus 3 is 7, 7 minus 5, therefore 2,000. So this is 4, this is 3, 7,000, but existing reserve is, let us say, 5,000. Therefore 2,000 should be taken from profit and loss account. Profit and loss account debtor to provision for discount on debtors account. On the other hand, here it is 7,000, 4 plus 3 is 7,000, but already you are having 8,000. So you have got more than your requirement, 1,000 more you have got. So that should be credited to profit and loss account. In other words, old provision, say 8,000 minus total of discount allowed in the year plus new reserve, new provision for discount on debtors. So 8,000 minus 4 plus 3 is 7,000. So 8,000 minus 7,000, 1,000 should be credited to profit and loss account. That is the meaning of this. In the balance sheet, new provision for discount on debtors must be shown as a deduction from the goods and debtors on the asset side. Similarly, in the previous case, reserve for discount on debtors, here additional bad debts and provision for doubtful debt should be deducted from sundry debtors on the asset side of the balance sheet. These things, of course, you are going to learn when I am solving the problems. And I come to provision for discount on, yes, in the balance sheet, how it appears. See here, sundry debtors, less bad debts given in the adjustment. Don't take bad debts given in the trial balance, because sundry debtors balance is after adjusting bad debts given in the trial balance. So not to deduct once again, it will amount to double deduction. Similarly, on the balance you are creating provision for doubtful debts, that should be deducted. New provision for doubtful debts. The new provision for discount on debtors, that should be deducted. So ultimately, the balance of debtors. So sundry debtors minus bad debts given in the adjustment minus provision for doubtful debts is nothing but good debtors. From the good debtors, you have to deduct new provision for discount on debtors. So that's regarding discount on debtors. Before that, provision for reserve for provision or reserve for doubtful debts and all those things. Now, provision for discount on creditors. Say there might be some debt creditors on the balance sheet date, and when you make the payment to them in future, then as a matter of business practice, you are likely to receive some discount from them. So it's an income. So while preparing the final accounts, you have to take such income, but you are not very sure what is the exact income. Therefore, provision has to be created for that, and that is nothing but provision for discount on creditors. Let us go through the provision or reserve made by a businessman during the current year for the discount expected from his creditors in the subsequent year is called provision for discount on creditors. Provision for discount on creditors is calculated on the sundry creditors, that is closing sundry creditors. If the total of discount received and new provision for discount on creditors is more than the existing old provision for discount on creditors, then the difference is entered on the credit side of the profit and loss account. Let us say discount received in the year, it is say 3,000. New provision for discount on creditors 5,000. And old provision for discount on creditors 4,000. So 5,000 minus 4,000, 1,000 is the amount to be credited to profit and loss account. In other words, it is profit and loss account provision for discount on creditors account debtor to profit and loss account. But if the old provision for discount on creditors If it is more than the total of cash discount received and provision for discount on creditors, then instead of crediting the profit and loss account, you have to debit the profit and loss account. It's given like this. If the existing provision for discount on creditors is more than the total of discount received and new provision for discount on creditors, then the difference is entered on the debit side of profit and loss account. Other way around, normally it should be credited, but if the old provision is more than the total of the two, then it should be debited to profit and loss account. Okay, what about the treatment in the balance sheet? In the balance sheet, new provision for discount on creditors must be shown as deduction from the sundry creditors on the liability side. That's about provision for discount on creditors. The next one, depreciation. Depreciation is nothing but decrease in the value of an asset due to various reasons like wear and tear, then obsolescence, and then because of accidents, etc. Because of various reasons, there might be decrease in the or deflation, decrease in the value of an asset or diminution in the value of a fixed asset. That's called depreciation. So depreciation is a loss, so it must be adjusted. So depreciation account as asset account. Normally, a certain percentage of asset is taken as depreciation. There are different methods of calculating depreciation: fixed installment method, diminishing balance method, and other methods. So accordingly, you have to calculate and adjust depreciation account to asset account. So how it should be treated? So depreciation should be debited to profit and loss account, and it should be deducted from asset account in the balance sheet. If depreciation appears in the trial balance, it is a nominal account, therefore it should be taken only in the profit and loss account. Interest on capital. So interest on capital should be debited and it should be credited to capital account. So the proprietor of the business is entitled to receive the interest, therefore his capital account is credited, interest on capital account is debited. Interest on capital is a loss from the point of business, therefore it is debited to profit and loss account and credited to capital account on the liability side of the balance sheet. Then interest on drawings. So interest on drawings is an income from the point of your business. Therefore, it should be credited to interest on drawings account and it must be debited to either capital account or drawings account. How it should be adjusted in the final accounts. So interest on drawings account should be credited to profit and loss account, and then it should be deducted from capital account on the liability side of the balance sheet or added to drawings, and then the total drawings will be deducted from capital. So like this, these are the items to be treated while preparing the final accounts. Together we call that adjustments. So more about this you are going to learn while solving the problems. Then and there only I will further explain these items with the help of certain examples. So thank you very much.